91. This subject here is about globalization. What does globalization mean? It means goods can be produced anywhere in the world, they can be sold anywhere, and you can borrow money from anywhere, and then you can market those goods anywhere. So globalization is really about the whole world. It's about producing goods anywhere, marketing anywhere, selling it anywhere, and it also means much more so that more countries are interdependent than they were before. Now, why has globalization become such a big topic is simply probably because of the Asian continent, particularly China, their massive growth over the last 30 years, which means that they have become major players in terms of the whole world economies. And in fact, China is just about to overtake America in terms of size of its GDP. So that's why it's become such an important topic. And one of the consequences of all this globalization is actually that China has this really large trade surplus. America has this really big trade deficit. The UK has a pretty big trade deficit. However, if you can take advantage of what globalization offers, then globalization is clearly a good thing, and we can't really stop it. So overall, when you look at this picture, we say, well, for the UK, it's probably been pretty good. For Africa, it's got to be managed. Clearly, it's been fantastic for Asia and everything else because they've been able to achieve export-led growth. For America, well, in a sense, their power has diminished because of the rise of China. So it's no longer the biggest country in the world. And there's this idea of decoupling whereby Asia can now create its own demand and doesn't have to rely on America, which is what happened in the past. Okay, so that's globalization for you. And I'm just looking around for a pen on here. That's globalization for you, and I'm now going to go through the subject. So Peter J came up with a pretty good definitions that the good can be produced anywhere in the world. You can get your capital from anywhere, you can use technology from anywhere, you can get your raw materials from anywhere, and then the profits can be sent back to whichever country owns that particular company. Okay, so what are the reasons for globalization? One of them, which we've just been covering, is the explosion of financial capital across the world. Okay, so there's a lot of money in the oil-rich states. They have to recycle that money. A lot of that money will come, say, back to the UK, and then we can use that money. We pay them an interest on that money, and then we can use that money in our own country. Or a lot of our capital can go abroad. So we might decide to invest in Africa right now, which is the highest rates of return in the whole world. So therefore they get investment, they get foreign direct investment, and then their economies can also take off. A key player in all of this has to be China, because China now has enormous economic power. Three reasons. One I've already mentioned is, one, because they have this massive trade surplus. Secondly, they've been buying up government debt in America, and they've been investing a lot of money in companies abroad. And thirdly, because they've gone on a buying campaign across the world. Because they've got loads of money, you're going to get the best bargains, and the best bargains out there right now probably happen to be in the poorer countries, e.g. South America, and in particular Africa. So there is this explosion of financial capital across the world, and China has this thing called a sovereign wealth fund, which is worth about $2.5 trillion, which they can use. A sovereign wealth fund is like a great big fund that's owned by the state. Okay, there's deregulation of financial markets, so money can literally go anywhere. So a lot of the money, a lot of our money before the credit boom occurred had come from the oil-rich countries, and it ended up in the UK, and then our banks tried to use that money. Lower transport costs. The price of oil in the past has fallen. It's become cheaper to transport goods, although right now it's becoming more expensive again because of the rise in the price of oil. And in fact, Jeff Rubin says that because of the rise in the price of oil, that the whole world is about to get a whole lot smaller, meaning that we may be deglobalizing in terms of what happens in the world at large. There's a growth of the internet. So you can buy your goods anywhere, and then you can create your own marketing device on the internet and then sell it anywhere. A bit like these lessons. These lessons can go global, which is part of the idea. Multinationals, obviously, great big companies. McDonald's, based in America, but has got arms all over the world, even in Beijing. Zara, Jaguar Land Rover. These companies are huge, and they're selling goods anywhere, producing them anywhere. And multinationals, if you've got a great idea, why not expand that idea across the whole world? And lastly, maybe because countries are taking advantage of lower labour costs. So in particular, our industrialization, in a sense, has been exported to China. China now makes those goods and feeds those goods back to us because they have lower costs, so therefore they can produce goods more cheaply. Now the big question is globalization good for the UK? Is it good for Africa? Is it good for China? Well, an easy one for China and the Asian continents, for the BRIC countries, right? Globalization's obviously been pretty good, particularly for China, because they've been able to have export-led growth, and we've talked about that export-led growth. Multiple accelerator takes off, increase in AD, and everything else, whereas the UK economy has been run on consumption and government spending. So clearly over here, it's been a great benefit to China. Is it a great benefit to Africa? Probably is. We have to say that the Chinese investment in Africa overall has been good. Right, we need to be a little bit suspicious of it as regards any investment, because in a sense they're exploiting their resources. But they have built a lot of roads, that has opened up Africa, although a lot of those resources are then going back to China, which is a pretty big issue when we come on to the drawbacks of globalization, and in particular resource price inflation. Because as China and India grows, they use up more resources. If they use up more resources, that increases cost push inflation. And that's the big consequence of the growth of China and India right now, is that we will get cost push inflation, and that will make our economy more unstable, of course, unless we innovate out of the problem. Okay, so what about for the UK? Well, it's pretty good for the UK. It's good for consumers because we get a wider choice of goods, right? The UK has had a lot of foreign direct investment. Nissan has come to the A, Siemens has come to the UK. That pays for our current account deficit. It also means that we will then export more goods, and also the UK can focus on what we're best at. For example, banking, financial services. We can invest on, we can export the high value added goods. So as the world economy takes off, as there is world economic growth, hopefully we'll be able to sell more of those goods. And it also increases competition. And the more competition you get, the more dynamically efficient your economy has to be able to sell all of those goods. So we can probably make a pretty good case that globalization has been pretty good for the UK, right? The consumer certainly has more goods. However, clearly there are drawbacks of globalization. The biggest one probably being in terms of the environment. And as I said previously, we've exported all of our manufacturing sector to the Chinese economy. They have lower regulations than us, so therefore their costs are lower, but that means they're sending out more carbon emissions. There's something like 1 coal-fired power station being built each day in China because of their massive needs for energy. And that creates climate change, and then everyone suffers through climate change, through desertification and the rise in agricultural product prices. Large economic imbalances. This is one of the key things in the world right now, and one of the key things that the UK is trying to address through having a low interest rates and a low exchange rate, because we're desperate to get export-led growth. Because you can't continue to have a trade deficit year on year on year. Eventually, countries you won't be able to sell all of the things you have in your country to pay for that trade deficit, and eventually you'll have to go out and you'll have to borrow money. So this is a real problem, and of course China's got a very large trade surplus. It's also got a low exchange rate. It's based its whole economy on export-led growth. Okay, this is starting to change a little bit. I mean, the exchange rate has gone up ever so slightly, and they're trying to consume more so that they can demand more of their products. And lastly, the one I've already mentioned is resource price inflation. Cost push inflation with the lack of resources in the world, finite resources, lesson one, when I'm talking about unlimited wants, desires, but limited resources, which is a key economic problem. But actually recently, resource price inflation has probably gone down a little bit because of shale gas, which sort of puts Jeff Rubin's argument that we were going to get triple-digit oil prices forever, which is probably correct, but there was an argument that oil prices could go up to $300 a barrel. In fact, as an economist, that's what I thought would happen. However, that hasn't occurred. However, right, the UK must adapt. There's a guy who's written a book called The Rational Optimist called Tom Ridley. And what he says is, don't worry about anything because we'll always innovate ourselves out of any problem. Okay, I'm not so sure he's correct, but actually if you do innovate and you do use what's out there, then it needn't be the case that we're going to use up all the resources. So obviously in the future years we've got nuclear fusions coming on board. They also think they might be able to grow food on the sea, all of these sorts of things, and all of, you know, in the past we've always been able to adapt. Whether or not we can adapt to climate change this time is another pretty big question. However, if you do use supply side and you do have an innovative economy, then there's a chance that you can survive. So this is to do with how well the UK adapts to globalisation. And if we have the right policies, then we'll still be okay. And we'll still succeed, and we'll gain advantages from working with China, the African continent and South America. Okay, and then we've got the argument, well, are multinationals good for the whole world, or are they bad for the whole world? Well, I mean, there's a classic argument. Clearly multinationals have been pretty good for the UK economy. They brought in lots of foreign direct investment, that pays for our trade deficit. More investment will push out the AS curve. We get the multiplier accelerator kicks in, we get the expertise, and we get more taxes from those firms. So clearly it's been good. The only drawback of foreign direct investment really for the UK is the profits will go back to those other countries like Germany and Japan. And secondly, there's always a fear that those countries may just leave the UK. They have a lot of power in terms of decision making, because if Nissan decides to leave, the government's going to get very, very worried. So that is a little bit of a drawback. But basically the multinationals are pretty good for the UK. Are they so good for the poorest countries in the world? I'll probably argue probably not, because they're probably going into those countries, they're probably not paying a proper price for the raw materials that they're extracting. They probably haven't got tough regulations in terms of what's going on. Now, I happen to believe that foreign direct investment is always a good thing if you've got good, strong government in place who are making the right deals and saying you come in under our terms. But I suspect throughout the world, or I'm pretty sure throughout the world right now, it is being exploited. It's being exploited by these large multinationals who are not paying a proper price for their raw materials. The classic case of that, and something that I think economics is really all about, is the Congo, where countries are going in, multinationals are going in, and they are exploiting their resources at bargain prices. And in a sense, their workers are working for hardly anything at all, virtually a subsistence wage, working very, very long hours, and then the West is reaping the rewards of that. Now, I happen to believe that resources should be for the people of that country, and they should be used to develop those individual countries. And what's happening is, quite clearly, is that those resources are being exploited by multinationals, because that is the free market, that's how it works. They happen to have the power, and so therefore that's destroying the environment. There are also other issues about multinationals. Are they looking after the environment at all? They're polluting the environment, and that's creating climate change. However, in a way, that's the job of government to regulate those industries. Right, we just had a big session on the banking sector. The banking sector was clearly out of control as a whole. It doesn't mean all bankers are bad. No, it doesn't mean that. It doesn't mean all bankers are good. It means that there's some good bankers and some bad bankers. However, overall, the system is a little bit, well, not a little bit, it is definitely out of control. But if you regulate that properly through the various financial policy committees, etc., the Bank of England, then we should have a better banking system. And it's the same in the whole world. Foreign direct investment comes to the UK, they have a lot of power, but they still work under our government. I would suspect our government still just about has more power, although it still wants those companies to come in. Whether or not in the third world, if you want to call it that they have the power to make sure that those companies are not destroying the environment, are paying proper wages, are training their workers, and not exploiting the environment, and paying taxes, and not getting those resources on the cheap, right? But if the government isn't doing that, then that's going to create problems. So globalization has to be managed, and the biggest drawback of globalization is, in particular, I guess, with climate change, is there is no overall view of what we should be doing about the climate. And China says, well, we're just industrializing as America did in the past, why should we have loads and loads of regulation? But you really need to have a worldview of everything to decide what's best for every country, because if we all just pursue our own individual routes, right, that will lead to climate change, And if you believe in the Stern Review, which is what I do, but if you do believe in that, then we're going to take a massive hit in GDP of 20%, which is going to make the recession of 2008 seem like small time. Okay, lesson 91.